Preparing live stream, and we are going to record to. I'm going to record to fastest way is probably record to this computer. All right, all right, all right. Hello, ladies and gentlemen. Welcome to the Bulls versus Bears weekly Forex forecast. My name is Dr. Greg McLeod, and so good to be with you here on this fabulous Thursday. And I tell you what, it's going to be a scorcher here in Las Vegas. Hoping you're staying cool wherever you are. It's a global heat wave from all the way from Spain or all around the world to Japan. It's hot. In fact, they say it's 10 degrees hotter than average, right? And I'm not a climate alarmist because actually, my daughter came back from Antarctica and they actually said that we're actually cooling off. This is just a rally and a downtrend, right? Nothing moves in a straight line, right? So as it's going down, it goes up and goes down and goes up. And so, you know, it's supposed to actually get cooler, right? So don't touch that dial. But we're going to let's see if we can share our screen and get started with Bulls versus Bears weekly Forex forecast. So if you've ever wondered what's going on in the markets and how the economics, the fundamentals actually ties in with the trading, well then this is your right. You've come to the right spot because they are intricately tied together. And I'm going to show you very simply how to use the economic calendar to find best trading opportunities coming up next week. Okay. So let's go ahead and get started. Let me go ahead and we're trying to find our wonderful slide deck that is hiding among other slide decks. And okay, there we go. Sharing screen, share sound, share the screen. Let's go. Okay. Everything is going really slow. I think it's still on 4th of July weekend. And then let's go ahead, share sound, share screen 2, and view. And let's get the view going. Not that weird show, though. Hopefully, there we go. Welcome to the Bulls versus Bears presentation of Elite Traders University. My name is Dr. Greg McLeod. So good to be with you here. I'm a 30-year trading veteran, Wall Street veteran, dedicated to help you become a professional trader in 90 days or less using my proprietary pip and run system. If you want to find out more, go to www.elitetradersuniversity.com. Okay. Let me direct your attention to the risk disclosure on your screen to make sure you understand all risks associated with foreign exchange trading. And if you are on YouTube, a big shout out to you. Go ahead and tell me where you're from and where you're watching from. I want to see where our reach is. And also, please like, share, and subscribe to the channel if you want to find more videos of this nature to help you in your trading and help the algorithm know that this stuff is important, right? Awesome. And also my VIPs who are in the house right now, type in number 1 in the chat box if you can hear my voice. And number 2, if you can see my screen as well. I wouldn't want to have the lens cap on like I had last time where I talked for an hour and not had any video. So very important. Type of number 1 in the chat box if you can hear my voice, and number 2 if you can see my screen. And I won't move on. I won't move ahead until I get a 1 or a 2 in the chat box from somebody either on YouTube or on okay. So we're just gonna wait. Okay. I'm gonna check. I'm actually gonna. Okay, 1 and 2. Thank you, John. All right. And one brave soul out there. Again, I'm a 32-year trading veteran, and it's my pleasure to be able to bring to you what's going on here. Let's go ahead to our agenda. We're gonna go through the Forex majors. Then we'll look at silver and gold and the Bitcoin, and we'll look at the economic news first. And we're going to use my favorite trading tool in the world that of course I'm kind of biased because I created it. It's like it's my child. It's like, your child's always, even though he's like he may be a bum, but you still love him anyway, right? And my market heat map is not a bum. It's a championship piece of software I had had created back in 2014, and it still works. My market heat map, you go to www.mymarketheatmap.com and you can access it for $19.99 a month, or you can just use the front page. We do have we have some things here. See what's hopping, what's popping, what's dropping, what's not in the market. I like using the economic calendar, and this is very important. This is what's going to help you find out what to trade and how to trade it, and also, looking at what's going on in the world, events. We just recently had, Saudi tankers attacked by Houthis in Yemen, and that in the Red Sea. So now we have another front to the war that shot oil up over 100, and also we saw a risk off tone in the market where we see a lot of money flowing back into the dollar, into bonds for safety. Anytime there's war or famine or some type of geopolitical event, risk event, people will run to the U.S. dollar for safety. And so that's what we saw, and I'll show you in the charts. But let's go ahead and go through the economic picture. Thursday, we had a lot of Canadian data, retail sales month on month. That's not going to, now, in the case of what just happened overnight, where we had the attack on the ships, on the Saudi ships, none of this stuff is going to work, right? No matter how positive the data is for Canada, the dollar crushed every single one of these currencies, right? So we do have some Australian data that's coming out later on during the Tokyo session, which I love to trade. In fact, we had some Australian data yesterday, or actually, it was like early today. It's kind of hard to say because you got Asia. It's really early today. We had all this data that came out, very positive, and the Australian dollar shot up tremendously. It was a great trade. We were able to make money on that trade, and that came out at 9:30 p.m. So that's a great time to trade. If you ever want to trade with me, I trade 3 days a week, Tuesdays, Wednesdays, and Thursdays during Tokyo session for our Samurai Sword, a 50 to 50K challenge. And we're starting the new challenge for August. So make sure that you go ahead and sign up for our challenge for August. And also take advantage of our founders year savings. Save $153 when you go ahead and register for challenges for the next 12 months. So this was a tremendous move here, and it happened just before the tanker attack, which caused the dollar to rally and caused the Aussie to actually make a U-turn and sink the other way. Okay, so given that there's not any more, once the market gets attacked, here there's attacks and things going on, it'll get used to it. It'll start pricing it in, and then you'll see the opposite. You'll start seeing prices move in the opposite direction, away from the dollar. So right now it's a shock. Everybody thought it was like, hey, the Iranians are weak, it's over, and then all of a sudden, boom, a new front of the war opens up. So it's a surprise to the market, and that's what we saw the dollar rise. So let's go ahead and look at for next week, right? And then we'll forecast from there. Let's look going into Monday the 27th. We're going to have IFO business climate, and big howdy do to my daughter. Kira has joined on the call. Nice to have you on. My sweet, lovely daughter is on, and she's so beautiful, and I love her so much. Okay. I'm so proud of her. Anyway, IFO business climate, even though this Germany is part of the Eurozone, the United States of Europe, and so what we see is 85.6 for the business climate, and it's supposed to drop to 85.1, and that's the Eurozone. That's going to be a 4 a.m. release, and that's going to be like right after the London Open. So we'll see how that affects the euro. We have some UK data, CBI distributive trades. supposed to rise from -54 to -45. And then we have our 8:30 a.m. news cycle. There's two U.S. news cycles, one at 8:30 a.m. Eastern time and one at 10 o'clock a.m. Eastern time. And usually we get all of our economic data that's released, or there's non-farm payroll, retail sales. In this case, we have durable goods orders, transportation month on month. That's not mom. It's not your mom. Hey, it's your mom. No, it's not your mom. It's month on month. So we're comparing the month of whatever today's July. We compare June to May to June, and we look at durable goods orders. Durable goods are like refrigerators and dishwashers and stoves and also airplanes. Anything that takes a long time to make, those are durable goods orders. But when they say transportation, they're taking out cars and airplanes and transports, because transport they can vary. So if you durable goods order is supposed to rise from 1.3 to 1.4. Reason why we look at durable goods, because it takes a long time to assemble those. That means people have jobs, they're making money, and they are supporting the economy. So durable goods orders is a good indication of that. So when we see positive durable goods, like here we have the defense like missiles, the missiles and ships and tanks, those are also durable goods orders, but they take defense out. And, you expect during a war that, your durable goods orders are going to be up. But you really want, for sustained growth, you want to see durable goods and other things, like maybe, furniture and refrigerators and the like, right? Consumer goods, right? Versus just, tanks and missiles, right? So 2.1%, that's good. That's good for the economy. And again, durable goods is a long term. It's not like making a taco or something, services and restaurant food. It's something that a skilled craftsman has to build, whether it's, a power line or some type of pipeline for some oil. That's going to take time. And the durable goods orders are very good for the economy. And to see it go from -4.6 to 2.1, that's double, like a quadruple growth. So that's showing that America is back. Durable goods orders month on month from -4.5 to 2.3 is huge. So that will probably be beneficial for the U.S. dollar. Dallas Fed Manufacturing Index, Dallas, Texas. That's where you're going. Hey, he says hi, Daddy. From 0 to -1. Maybe when you fly there, you can maybe help them get their manufacturing up, going back to Dallas on Sunday. You can throw that in there. Australian dollar, RBA governor's going to speak. And, we don't know really what he's going to talk about, so we don't really care. Tuesday, we have more Eurozone data. We have the French flag. They're part of the Eurozone. Spain is part of the Eurozone. So the Euro is affected by these flags. Again, Europe is the Eurozone is the United States of Europe. So they don't have individual currencies, just like we don't have a Texas currency and a New York currency. We did. I mean, we had colonial currencies. Every state, every colony had their own money, and it was havoc. It was crazy, right? Do I want a Maryland dollar? Do I want a North Carolina dollar? And how much is the exchange rate? Well, these guys, when they united with one currency called the euro, they got rid of all their currencies. So, so we get the employment rate supposed to actually drop, which is good. Unemployment rate drops from 10.8 to 9.7. Still high. It's the highest in the Eurozone. Consumer confidence stays the same in France. And unemployment benefits claims actually drops a little in France. So that might be positive for the euro, but the long-term trend for the U.S. Is going to be positive. Europe is considered the euro is considered the anti-dollar. So when the dollar goes up, the euro goes down. When the euro goes down, the dollar goes up. And I'll show you in a chart. Here's ADP employment change. ADP is a private company that issues paychecks. When I work for the brokerage, my paycheck came from ADP, and they count. So they know pretty much, who has, If they don't get a check, then they don't have a job, right? If they have a check, they have a job. So it's easy. Count the checks, and you know how many people have jobs. Non-farm payroll, on the other hand, it counts federal employees and school districts, you know. And those are not covered by ADP. So, but ADP usually gives you a forecast or a foreshadowing of the non-farm payroll number that comes out on the first Friday of each month. And next week we're going the last week of July, so we're looking at the week after that. It'll be August 7th for non-farm payroll. That'll be the first Friday, and so that's a big number that people watch. So again, we have the eight, and since ADP is a private company, they're not part of the 8:30 news cycle. They come in at 8:15. They come a little early, right? They have good trades advance, supposed to rise from negative 105 to negative 93, and that's good. The Trump tariffs and reshoring, goods from manufacturing from outside the U.S. to inside the U.S. creates jobs, reduces our trade deficit, and so you see it's gone down a little bit, right? Retail inventories, ex autos, month on month, 0.3 unchanged. Wholesale inventories, month on month, supposed to rise from 0.1 to 0.2, and then we have the home price index, actually rises from 1.1 to 1.3. That's the little that cause about the affordability of homes. The people are watching that number. CB consumer confidence is supposed to drop slightly from 91.2 to 91. And then we have API crude stock change. We don't have a forecast on that, but they got 2.60 million barrels of oil. And we the United States is now the number one producer of oil, of energy. And so maybe we'll see that reflected. And we have a lot of Aussie data coming out on there. I'm not going to go through all this, but all you're going to do is look at the flag and say, look, I want to trade the Australian dollar on Tuesday because we've got inflation rate, trend mean, all these data points. I just look at the flags. So if you don't know what to trade, all you need to do is look at the flag. The numbers are important too, but you're going to be able to see in the chart the direction of the market and be ready to take advantage of what's going on here. Now, Wednesday, we have lots of UK data coming out, mortgage approvals and mortgage lending. It's going to be a lot of end of the month stuff going on. So I'm going to just go by the flags. We're going to look at the pound. We want to trade the pound at 4:30. If you're up at 4:30, remember, you don't want your life to go around your trading. You want your trading to go around your life. So if you're up at 4:30, that's fine. I have students who are musicians, and they usually work at clubs late at night. And guess what? Their circadian rhythms are to trade at London, trading at that time. But however, maybe you are an early riser and you're up at 5 or 6 o'clock Eastern time, and the New York session is best for you. So I'm not saying you watch every single one. Watch the ones that are in your time zone, in your trading zone. I usually allocate about 2 hours of my time to trade, and my hours are like 7 to 9. So I can trade the Tokyo session. So going here, we've got lots of U.S. data. We have gasoline and crude oil, but we have the big one is the Fed rate decision. This is the biggest one. Interest rates are the biggest driver of currency movements. The Fed has a dual mandate. The central bank of the United States has a dual mandate for price stability and for full employment. And so if they see inflation, they want to raise rates to keep inflation down. If they see maybe the jobs are too soft, then they will cut rates in order to stimulate the economy. They'll leave rates unchanged if things are okay. And we can see 3.75 is widely expected for them to keep rates unchanged at 3.75%. There'll be a press conference, and usually the market is going to be kind of dead going into this announcement because the United States is the largest economy in the world, and nobody wants to be on the wrong side of the trade. But usually when they keep rates unchanged, it's the same as a rate hike, and we will see appreciation in the U.S. dollar versus other currencies. And we can see a continued uptrend in the dollar, continued downtrend in the euro. And boy, there's a lot of news here, right? I mean, we just really got the Eurozone. GDP. GDP is we got the Anzac business. We got some Australian data coming out there at 2100 at 9 p.m. if you're trading the Asia session. Consumer confidence out of Japan. Sometimes Japan news doesn't really move the market that much, but we'll see. The yen is at a critical point. It's melting down like crazy. We're at the 163 handle on dollar yen, and once we cross that 164 area, we'll jump right into like 178. It's going to be crazy for them. They've been trying to intervene, and I'll talk more about that in the charts. But wow, we got a lot of news here. A lot from Spain. I think, well, you know what? That's what I did. I've got a lot of the medium term events here. I'm going to filter those down to the high ones, right? That way we can like shorten this up a little bit. Because there's a okay that there's this next week is going to be very volatile because this I've never seen this much news. I mean, Friday is jam packed, lots of UK data. We have inflation rate out of let's see, let me go back here. Thursday, I skipped. Okay, we have lots of Australian data. Oh no, we're not there yet. Oh, I've reversed, right? There we go. GDP. Oh yeah, the Bank of England. The Bank of England is going to have its the interest rate announcement to 3.75. They're going to keep rates unchanged probably, and that could be bullish short term for the British pound. And you have they usually have 9 members that vote. 0 to 9 vote for a cut. 2 might vote for a hike. 9, and with the 7 remaining, and then you have a policy report. Then European inflation rate year on year that's coming out, and then the 8:30 news cycle for Thursday comes up, and this is another you have this PCE inflation data that's coming out, and inflation's been on the drop, from 0.3 to 0.1 is the forecast. Usually when there's lower inflation, you might see the dollar actually start reversing, and then we come to Friday, last of the month, we have European inflation rate, European CPI, and then we have GDP out of Canada and the Michigan consumer sentiment. So we have a lot of choices. There's Canadian dollar, there's lots of US data, lots of UK, and of course the euro is going to be in play. Let's get to the charts, right? And I'll show you a couple of trades that we actually did last night overnight that you might want to take a quick gander at, right? And okay, computer's like going, come on. Okay, might have to close some of these tabs here. We're kind of like we're going tabby crazy here, right? And let's get the charts. We'll start with the US dollar index, an arrangement of currency pairs with percentage change, and I think I accidentally closed it out. And wait, oh, wait a minute, Mr. Postman. Wait, Mr. Postman. Okay, let's try this again. We'll make sort of a fresh browser there, right? Or we can bring this one over. Okay. Wait. Okay. And close. We're gonna do how about let's do this. Let's do everything to the right. Let's close that. Yeah. Doing some video editing there. Wait. And let's go here. Let's go back here and close all these. Close to the right. Okay. Yeah. When I edit videos, I need to delete them right afterwards because they can consume up a lot of your hard drive space. And let me close all of all y'all's over here. And it could be trading view site. It's a little afternoon Eastern time. Maybe there's a lot of people on maybe the server is busy. Everything else seems to be okay, right? So let me show you this. This is something that Adrian, one of our students, created. And he's a genius. He's created this chart. We have a lot of sharp guys and gals at Elite Traders University. We help each other. We're a community, and we help each other. So he created a volatility by day, so we could find out where are the best times to trade. The darker, this is the euro, and it talks about average volatility. Volatility is like the wind in your sails. The more too much volatility is like having a tornado or having a hurricane, right? It's like flying a kite in a hurricane. Too much volatility, or sailing a boat in a hurricane, versus sailing a boat with some wind. You need some wind, you need some volatility, or the market is like dead, right? So the most volatility you'll find in the euro, you'll find on a Thursday. Sure enough, right? Today is Thursday. And we had giant move, 60 pip move in the euro. And we can see that during that time, 11 o'clock, which is, happened about an hour ago. And, the open, we have like 1.71, and it increases and through the afternoon, right? In fact, I'm long euro right now, but it's just ever shows up, right? And then so Thursday, and then Fridays has lots of good volatility. Wednesday, Tuesday, and then the Monday you get that kind of weakish, but and then our Asia session, we get that 8 o'clock move, that 8 o'clock run, 7 to 8 o'clock is like 2.11. So if it's that 2 and over, you're going to find some good moves in the market. And so that's like the meat, right? If you can get up at 11 o'clock, which is like 3 hours, like 8 o'clock my time, is Pacific time. Okay, is she? I've never seen this baby. There we go. There we go. Okay, come on. Your trading spacecraft is fueled and ready. I think it blew up on the launch pad like SpaceX. Speaking of a stock, you want to see a stock that's like plummeted, right? You want to see something that's really plummeted. SPCX is SpaceX, and how the mighty have fallen. So this is a 4-hour chart. And so we debuted at SpaceX at 135. 100. I don't know, where's my calendar? Okay, right there. Okay, yeah. So we like 135, got to a high of 227, and now we've been in this downtrend, lower highs and lower lows. And I have a projection of about $90. And that's where I probably will be interested in buying SpaceX. But there's a lockup period. There's people who bought shares. They can't get out of those shares until the IPO lockup period is over. So meanwhile, it's like they got in at 135, and now we're below the IPO price. And based on our Fibonacci projections, our 100% expansion is actually around 88.78. So this is where I would look at accumulating some SpaceX. I just threw that in there. If you are watching, I don't really trade stocks that often, but if you're interested in something like that, no problem, because Meta or Facebook did the same thing. It came in at like $50, dropped all the way down to about $15, $17 a share was the low of Facebook, and now we're like 600, right, on Facebook. So it's very, so this is a normal pattern. The panicans will give up. We'll say, oh, Elon Musk is a fraud and this stuff sucks and I should never got involved. And then it'll shoot up, and then we look up, it's going to be like $900 a share, and you wish you would have kept it, right? So don't be a panicking. It'll be okay. But I am going to wait, because I like buying things at a discount. People know me. I scream. I make a penny scream. I'm a penny pincher. So we like to see that get down here to this zone here. Anyway, let's keep going. Let's go to the U.S. dollar index. The dollar index is a basket of currencies versus the US dollar. And we're going to start with the monthly chart. And we can see that on this monthly chart, we are still in an uptrend, higher highs and higher lows. And we'll probably keep like that until we get some type of resolution to the war. We can see a nice ABC pattern. We bounced off the 200 simple moving average. One of the most widely watched indicators in technical analysis is the 200 simple moving average, and now we're breaking above the 50 on a monthly basis. On a weekly basis, we can see going granular instead of looking at, there's 4 weeks in a month. And so now we're inside that monthly bar, and we can see like an inverted head and shoulders and a big cascading drop we had from the top of 110 down to 98, and we're now crossing back and filling the gap that we have. We had a gap down. Our gap down took us like that. And usually when we have a gap down, price abhors a vacuum, and we will most likely see an accelerated price move of the US dollar to the upside and to fill that space, right, to form symmetry. And we look for maybe a target of 110.16. And that would be, a very sizable move from where we are. So bulls versus bears, so look on a daily chart, and we can actually see this stuff is ramping up for a new high, for a break. We have a bull flag, flag pattern, which just came loose. Price broke. This is our flag pattern. Price broke above the flag, and we can do Fibonacci expansions and all kinds of things to give us a possible target. 102.82, the 100% expansion of our AB equals CD pattern. We have an equal wave pattern. H.M. Gartley talked about the equal wave pattern. In fact, he taught it as a workshop in the 1930s, and he charged $15,000, the equivalent of $15,000 for this pattern, where we have this AB pattern, AB equals C and CD, right? When we have this equal wave pattern where price could go up much, much higher, right? Right, that's our equal wave pattern. Anyway, bulls versus bears, we are bullish. Okay, let's so make sure we got that going. Okay, good. Okay. All right, let's go to the anti-dollar, which is the euro. And the euro, and I took a lot of trades on the euro. Let me go ahead and let me just show you the short-term trade I did based on the samurai sword, the opening range breakout strategy. And this is and we're going to go to 5. We're going to jump to the 5-minute chart, right? So this is what happened. Our samurai sword, let me remove all the lines, remove all lines, remove lines. Okay. All right. So samurai sword is an opening range breakout strategy, and I use a pre-market. We have this red box or pre-market. We take the high and low the previous 30 minutes before the market opened. The green box is where the London market actually opened. And then right when the market opened, I went short with an entry at about 1.1422. And then I placed a protective stop equal to the height of the box. So the height, we're at 114.29, and the breakout or the low of the box, or low of the opening range is 14.23. So basically, that's a 6 pip stop, and a 6 pip stop in Forex is probably like as rare as hen's teeth, because most people talk about 40 pip stops and 30 pip stops and 20 pip stops, and I'm looking at a 6 pip stop because I'm talking about high asymmetric trading, or HAT, where we risk a small amount to make a large amount. So I placed that trade, went to bed, and then got out there at the 1387. So the risk to reward on that was pretty big, especially when we do our $50,000 to $50,000 challenge, we're starting with $50, and we're trading. So our stop, our entry is there at the arrow. Our stop is above right there, and then our take profit was the arrow. So we had a 5.8 to 1 risk to reward. And with a 5 to risk $1 to make 5, we're actually looking at needing to only be right 15% of the time. You can be wrong 85% of the time when you have trades like this. The math just works out where you could be wrong, 5, 6 times, and then on the one that you make more than all your losses put together and more, right? In fact, price continued to drop. I got out here, price continued to drop, and if I had a trailing stop or if I were up at the time, could have got as much as a 9 to 1 risk to reward. Okay. But I'm not kicking this out of bed for eating crackers, getting a 5.32 risk to reward. Okay. So now what I did on the south side, okay, so this is our trade that we took overnight. Well, I'm a big dead cat bounce. Don't hate me for using a stock market terminology, dead cat bounce, where price dropped to a low 1363, and we have lots of bottoming formation. In fact, this is the New York. I'm gonna put the New York opening range breakout. So our New York sword, this is our New York Samurai sword. We take the high and low of the 30 minutes before the market opens. The market opens at 9:30 a.m. Eastern time. So I went back 30 minutes to create the red box. Our special Samurai sword indicator. This is the sword that we're looking at. If you want to visualize it, I can, boom, there we go. There's our sword. It's not a Japanese samurai. It's not a katana, but you get the idea, right? Is that this is the sword, right? This is the sword. That's the top edge. That's the bottom edge. Now, according to the strategy, we haven't broken out yet, but we hit the bottom of it repeatedly. And so I just went ahead and took a long there because my stop loss, I'm risking about $6, $7 to make 28. That's a 4 to 1 risk to reward ratio, right? I'm willing to give up, even I took this down from 23 down to 88. So that's like 60 pips, right? 65 pips. I'm willing to give back 7 of those 65 pips to make 28, right? So there's your HAT, high asymmetric trading, where I'm willing to risk a little to gain a lot, right? Now if I entered at the top of the edge, my stop would have been bigger. But here it's like, hey, either it goes up and continues, or, and I always try to get half of the move back. Why? Because people got short a lot of smart people got short here, and they made money. And so to get their money back, they have to buy their positions back. So this upward movement is not so much people bullish on the euro, but they're basically saying, hey, I want to lock in my gains. And as they buy their positions back or close their positions, when they close their shorts, then prices start rising naturally because of people liquidation. So this is a liquidation rally, not so much of a, hey, there's some people like me who are just riding their coattails. As they liquidate, prices start to go up. And as they go up, well, then, because people are placing their stops. There's stops at probably 113.86. And if price were to break that, then we would probably roll right into my take profit, which happens to be at the 200 simple moving average, the yellow line, and the 50% drop, the half back, right? So, and we're up $7. It's not to our gain, right? And we can see the anti-dollar doing the same thing, right? This is the U.S. dollar index. Remove all drawings, right? And we can see that as the euro was falling, the dollar was rising, and now the dollar is falling and the euro is rising. So that's how we use the US dollar in our trading. And that's just a little lesson. I'll show you that apart from the analysis. Now let's zoom out to that higher time frame. We did do the higher time frame of the dollar. It's fractal in nature. So we can see that we are in an uptrend, right? So let's go back to our monthly chart and let's look at the euro. And I'm going to look at another euro that does not have all these lines. Oh, Pepperstone there. All right. And then we'll go to our daily and remove all the drawings there. So we can see that the euro is in a downtrend with lower swing highs and lower swing lows. And we recently, well, not recently, maybe like early this year, like we rallied against this trend line formed by 2 points. And that we have a downward trend channel where prices are rallying, then dropping and rallying and dropping and rallying and dropping and rallying and dropping and rallying. In fact, that's, like our temperature. Yes, it's hot. It's 10 degrees hotter than than last year. But this is a rally in a downtrend. This is a rally in a downtrend, right? So just because we see, the euro go up for like a day, like we're at the 117, oh, the euro's going up. It's like, if you zoom out, we're in a downtrend, right? So if you get the climate activists saying, hey, no, the planet's catching on fire, look at all the fire, we're in a downtrend, right? We're rallying in a downtrend. So yeah, it's hot now, but it's probably gonna be colder, right? Just like we might see a rally in the euro, but I know Keelan he doesn't like my trade because I'm going counter trend, and I'm not much of a counter trend trader either. But I think that I can time, and we all, all scalpers think they can time the market, right? But this is this downward trend, this ABC, very strong downtrend, a head and shoulders, a very bearish pattern that's recognized by traders around the world. Is a price pattern where we have 3 humps, my humps. You got hump, right? And then prices gives up, and then we can see prices maybe dropping even further, right? This is also a bearish Gartley pattern as well, where where price has hit a high, and usually in this type of circumstance, we hit the 100% expansion target right there on the 118 area, right there. And usually when price does this, price usually goes all the way back down to its origin, to the source of where it came from, right? Where did it come from? Well, it came from here, right? So that's where it came from. It came from price came from here. There's a trader on Twitter, and that's all he does is he just shorts the euro. And so he has a lot, he has a big account. He can ride that out. He can ride these retracements, but he knows that overall, the tide, the whole tide of the market is down. So if you can outlast the rally, then you'll get rewarded. The red marks, the reds, there's more red than green, right? All this red, a little bit of green, red. So when this thing kicks up into the downward move, into the direction of the trend, it accelerates, right? On your phone, though, you might see, going out a smaller time frame, you'll see a little uptrend, and you'll think, oh, wow, this is an uptrend. But you're on your phone, and you really need to be you need to have lots of chart data. You need to have lots of price action so you can see where prices come from. If you don't know where you came from, you don't know where you're going. So it came from here, from 149. When we're like 160 back in, I remember seeing the euro at 160 back in the day. And we've been sliding ever since then. And so, with little ABC rally and then a 5-wave correction down. So we're in that move down. And it ties in with a lot of things that are going on, a lot of investment the countries are making in the U.S., a lot of onshoring. Apple's investing into plants for building iPhones and other technologies, and NVIDIA is building a plant. So all that's on reshoring back to the U.S., and it's going to make the dollar stronger. And we can see in the trends in the markets that the dollar is getting stronger because, hey, we're not exporting our industry. So bulls versus bears, I am bearish. Okay, we'll go through all these other currencies a little bit faster because basically it's just the Forex game is really the dollar versus everybody else. Dollar CAD, here is dollar CAD, and let me go ahead and remove all these. I've been trading so much dollar CAD. Get rid of the execution marks and remove the drawings. Okay, and we can see that we after basing for a bit, we've been making some highs. We pulled back, and on the weekly, drop it down to a daily chart, and we can see that we are coming back. We've got a bounce off the 50-period moving average and a resumption of the uptrend after our correction. We have probably a whole month of correction where we pull back from a high of 1.4244 down to a low of 1.4013, about 200 pips. And now the retracement is finished, and now we're resuming the uptrend. We can see bulls versus bears. I'm going to be bullish the Canadian dollar. All right. So let's go ahead and get the bulls going on. Okay. Let's look at dollar yen. Dollar yen has been going through the roof. Let's go back to a monthly chart, and it's spiked this 40-year high. If you go back 40 years, back to 1985, like when I was graduating high school, that's the high that we were at. But once we break that high, there is nothing. There's no other price action here. Not until you get back to 222. What would that do to the Japanese economy when their yen? It takes 222 yen to buy $1. It's a great place to travel if you want to go on a trip. Great place to travel. Not so good for the people there because it's going to be inflation, but your dollar is going to be by a whole lot on an Asian vacation. I know Kira's like going, "Hey, Daddy, let's take me to Asia. Take us to Asia." Yeah, Asia. When this breaks here, we're on a plane to Japan. It's going to be fun, right? Because why? The Bank of Japan has been trying to fight this break, this inverted head and shoulders, which is they've been fighting for decades, hoping that it would never happen. They have 200% debt to GDP ratio, and their economy is and then by the high oil prices is not going to help at all, because now they have to spend more money on oil, which they don't produce any, and that could cause a meltdown in the Japanese economy. And so this is how we would play that. We would continue to be long dollar yen. It can be kind of difficult because they do intervene, but understand that when they throw $35 billion at it to try to shore up their currency, to make it stronger, it's a drop in the bucket in a $7 trillion a day market. $35 billion moves their currency like 30 pips for 5 minutes, and then it shoots back up. So all these failed attempts of intervention, they strengthen their currency, hoping they keep it strong, and it jumps back up. And they strengthen it, and they're fighting, and now it looks like we're breaking out above and closing on a daily basis above this 40-year high of 63.11. There's this empty void of price action. There's nothing here for 40 years. There's nothing here for 40 years. We're uncharted territory. And so this is a vacuum that's gonna get filled very rapidly. So bulls versus bears, I am so bullish. Bye. Yeah, Carrie, you almost got named yen because we're making so much money in the yen when you were born back in the day. Nice. Here we go. Pound dollar is gonna be same kind of thing. Topping pattern here. We're in a downtrend in that, we had we had double bottom here back long time ago. It was just like, I think when the Queen Mother died. No, the Queen died. We did have in 2002 with the Queen Mother that died, and same kind of thing. Then we have the Prince, King Charles coronation kind of rally off that low. But we're in a downtrend, and this is we call a descending triangle, where it looks like it's a double bottom, but it's struggling. Yeah, your name is Kira. Kira is that Japanese too. Yeah. Yeah, I was showing. I was showing. Oh, yeah, I was talking to Krista on the other last night, and where was yours? Praise Krista. Right, there you go. Precious. Your name signifies precious jade, natural grace, reflecting a pure and elegant spirit, full of vitality and charm. This is Chinese, not Japanese, though. Anyway, this is crazy. Yeah. This is live stream too, so this is uncut live radio, right? Sideways consolidation, the British pound though, and we're sandwiched between the 50 and 200 simple moving average, coming on a downtrend. It's stronger than the euro. It's still kind of holding its own, but still, we're looking at lots of this is unable to penetrate that one hold above that 138 area. Eventually, we look for a break back down. Let's go to a daily chart, and there we go. Yeah, it's curling over. It looks like it wants to drop. We got support at 130, 163. I think if you're looking for something to short, euro probably easier to short than the pound, but they're all. I mean, we've got this topping action where price has been unable to break this invisible barrier above this area. This has not been able to get through. And so that after a while, we give up and we start making lower lows, and we can break below. Structure low is 1.3019, and then we can see a move all the way back down to 1.2093. Yeah, the basic dollar straight. So I'm bearish this. Dollar Swiss, I mean, it's just going to keep going up. It's a dollar pair. The bottom off the low. We had a low about 75.87. Swiss National Bank does not like a strong currency. They export nice watches and chocolate and clocks, right? So they want to keep their economy from overheating. So they're going to continue to support a strong dollar as well to keep their currency from being invested in. They don't have, in fact, they don't even their interest rate's like zero, so they don't even you borrow money. I mean, you're not going to get anything for swap. So this is a very simple bulls on that one, right? Right. All right, let's go to across the sea, across the Tasmanian Sea. Let's take a look at the Aussie dollar. Aussie dollar 2 is also in a downtrend, but it's finding these lows, and how long can it continue to fight? They have a strong economy and high interest rates. So actually, they are probably the strongest of the currencies against the U.S. dollar. Their biggest trading partner is China, but still, this is we're still in a downtrend, and we just made a higher low here, right? And then, but we're making lower highs, so we're in a triangle, and we're at the top of that triangle. We're looking at price coming back down, back to support. And let's go back to a weekly. See, you can see they're trying to stage a little bit of strength, trying to bounce. They've had very strong economic data, but still the U.S. economy is much larger, and if China starts slowing down, because now the whole Iran play, China buys their oil from Iran and Venezuela. They were buying cheap, sanctioned oil, which drove their economy, drove their industrial complex, right? And China is the biggest trading partner of Australia. But with that repricing, where they have to buy oil at the market price, well, that's going to undermine their power to produce cheap goods based on lower oil, right? So, and if China catches a cold in their economy, well, then Australia catches COVID. They catch pneumonia, right? So we could see a slowdown in China with the higher oil, and we could see Australia take a hit on that too. New Zealand probably the same way. So I am tentatively bearish, but bear market is going to have bull market rallies in an uptrend. And you can see this is still, it's still going high, making higher highs. And, we haven't made a lower low, and we haven't really seen the end of this on a weekly basis, daily basis. Maybe we have our lower high there, but we still haven't broken below 68.54 to confirm a structure, a bearish structure, right? This is the low, 68.26, 28. And but once we get below that, then it's going to be bearish for the Australian dollar. Okay. Let's go ahead and jump over to gold. Gold, the shiny metal. And it's been, I was talking to some traders the other day, how smooth it was to trade gold. I mean, it was just buy and it went up, right? Now it's very jagged, very unnerving. And, you're fighting a strong dollar because we price gold in dollars. So if the dollar is strong, gold doesn't necessarily go up. And since we do have falling inflation, the PCE coming out next week is going to really determine. Gold is very sensitive to U.S. inflation. Very, right? So because gold is supposed to be a hedge against inflation. But what if we have no inflation or lowered inflation in the U.S.? Well, there's cost of security, of insurance. Gold doesn't pay a dividend. Gold takes money because if you store in a vault, you have to pay for the vault. You have to pay for the security. You got to pay for insurance. There's carrying costs with gold. Those carrying costs get eaten up if there's inflation. You can say, hey, look, I've got inflation, but look, I've got gold, and gold's going up. But it's not going up. It's been going down. So now you've got negative. You've got an asset that's negative right now. There is support coming in here at that defending that 3970 to 4,000 there. That whole little round number area is being held, which is an old low from October 2025. We're seeing we're holding that. But is this a bigger bearish head and shoulders where this is our right shoulder, this is our head, or the head of gold, and then we have another shoulder, right? And if that's the case, this is bad for the bulls, right? Where we can see this is our measurement objective, and then we take that from a breakout point of the neckline, and then now you're seeing like $2,300 gold, right? Now, JP Morgan is talking about $6,000 gold, but I don't trust them. They are the biggest market manipulators. In fact, JP Morgan Chase manipulated gold for 10 years, keeping it at that range back that we saw. All of this is market manipulation for the past 10 years. They manipulated gold. That's why it never went up. And when they were finally caught and went to jail and got fined $1 billion, gold was able to move up. And now they're saying, hey, gold's going to go up to $7,000 an ounce or $6,000 an ounce. Do you believe the people who actually manipulated gold, right? JP Morgan gold. Let's see if I have that article. Yeah. U.S. SEC fined JP Morgan $1 billion for manipulating precious metals market. They pay $1 billion in fine. JP Morgan manipulates silver and gold for 9 years. Okay, I was wrong. I said 10. Sorry, don't mean to exaggerate. JP Morgan manipulated gold and silver for 9 years. JP Morgan hid their illegal operations from the US SEC. They hid from the SEC. JP Morgan dealt with free market ETFs, physical gold, silver. JP Morgan is just a company. They do not have unlimited dollars. Gold and silver market cap 30 times larger than Bitcoin. Okay, but they were fined. So, and they're saying, oh, well, gold is going, I would think, if they're saying it's going to go to 6,000, it's probably going to go to 2,300, right? And that way they can offload their, but that does not look good at all, right? From a technical point, because why the long-term trend line was violated. This was our uptrend. We violated it on March 16th. Hey, my wife's birthday. And then basically we have a 5-wave move. 1, 2, 3, 4, 5, and maybe an ABC rally, and then maybe a breakdown below this. This is 3980. We close below 3980, then we start going back through all these previous levels. And so this is another. There's also a correlation too between the dollar, yen, and gold. If you were to chart them together, they actually move in the opposite direction. Let me see if I can do that. Let's see, dollar, yen, USD, JPY. You're getting some bonus information here, right? Bam. Okay. Yeah, because they're gonna move up. So we're getting an upward move, and I mean, you gotta like maybe switch to a logarithmic scale or something like that. Yeah, undo, right? But as the dollar yen goes up, we usually see gold go down, right? They usually they go kind of contrary to each other. So if we break out on the dollar yen and filling that vacuum, we can see this vacuum being filled all the way down to maybe 3,000 area. For gold, right? So a lot of people are talking their book. They say, "Hey, gold." It's like, gold is an inflation play, and if inflation is falling, then the logical conclusion of owning gold, diminishes. Even though JP Morgan Chase, they manipulate it, so maybe the real price is not $1,000 or $900 an ounce. Maybe the fair value is more about 2,500, right? I know people are saying, well, the gold silver ratio and inflation, right? Gold should be 15,000. It's like, yeah, but no one's gonna pay 15,000 for an ounce of gold, not with this going on, right? If we have a bout of inflation, which with the oil going, if prices of oil keep going up, we could see a rebound. So let me get rid of this all bearish scenario. Because anytime we have an all bearish scenario, that's when the market can surprise you and bite you in the butt, right? So, there's no inflation, but oil is going up to $100 a barrel. How long will it be before those oil prices seep back into the economy and reignite inflation again? And then we could see gold shoot back up, right, as an inflation play, right? So let me just go ahead and put a caveat on that we could see a resurgence of gold if we see inflation go up, right? And we're going to find that out with the PCE that's coming out, and the inflation numbers, because inflation numbers are always like 2 months behind. We're going to look at the June numbers, and we're in July, right? So it's always going to be behind. We won't see the July numbers until August. And when we do, they'll say, oh, well, inflation is high. And then all of a sudden we'll see gold shoot up all of a sudden, right? Especially if we get a 5 handle on inflation, then this is going to the moon. But if inflation comes down, then we see like 2,000, 2,500 in gold, right? Again, it's a hedge against inflation, because if you just keep your money in the bank, just put it, and then oil goes up and all prices go up, that dollar is like an ice cube. It's melting, right? Just think if you took your money and you bought Amazon or Google or an Nvidia, and instead of keeping your money in the bank, you kept it in stock. Now, stocks are risky and they could go to zero. So I'm not giving any recommendation, but that's an asset that's going up in value, right? In fact, if you got Amazon and it goes from seven to maybe 700, and then it goes up to 800 or 900, and you have all your money in there, and instead of, if you had in your bank account, it was gone nowhere, right? Your money is not working. So having your money work for you is what you want to do. And if you keep it in cash or in your jar buried in the backyard under under a mattress or something, well, it's losing its buying power, right? So that's a little your econ lesson today, right? Let's go to Bitcoin, or we could look at silver. Silver is interesting too because we've got this. This is a daily chart, a double bottom and a rally, but we've got this small Harami candle, which is kind of bearish too. But again, if we do see inflation, silver is another. They're supposed to have a strategic floor underneath silver. I thought they said it was going to be around $64, and we saw that was a floor for a while. 64. It was like 60. We had this floor, and then we broke below that. And it's the government. The government says it's a floor. Can the government really do anything right? Probably not. So it's, oh yeah, we're gonna put a floor under silver. It's like, well, why are we at 57, right? So if inflation, like I said, everyone probably thought the war was over, and now it's getting worse. And if the oil picture does get worse, then we would probably see inflation. We probably see these metals actually go up. So I'm cautiously bullish on silver, cautiously bullish on gold, thinking about that picture because I'm looking at oil. I'm looking up here at UK oil and look at that, right? Yeah, that was a perfect T-ball shot right there, right? You get that. I had my T-ball. I said, hit that baby short, and it bam, like that, right? Went down to the 78.6, retraced about $70 it got to an old cluster right here on February 24th. And look at oil, shot right back up, right? Now, this could be a rally in a downtrend, maybe, right? If we take a fib from the high to the low, we are bouncing off the 61.8 Fibonacci, a very watched area. And so we'll see if this stops price at 101 and then we continue back down. Could be a place where the bears were taking a break so they get some profit taking. If they were short here and they made a ton of money on the short, let me show you. Right, if they took an ABC move to the south side, look right down to the 1.618. The A leg to the B leg to the C, the ABC came right to 1.618. Profit taking probably happened automatically. And so we get over, once they take profit back to that halfway point. So 618, the half is right here, 95.58, got to 101 with a wick. So we might start seeing prices come back down. Maybe the last throes of the regime in Iraq, trying their last bit of energy before they give up. Might be a good place to actually place a short. At this high, looking for a resumption of the downtrend. 1, 2, 3, 4, and a 5 that takes us below. I'm looking for like 53.98 to $43 here, right? Because we're rallying against the downtrend, and it looks very ominous and strong, but it stopped here, right? So I'm actually bearish on oil. Yeah, I think that we are probably close to a resolution. We got, given that the midterms election is coming up, we probably wrap things up. Okay, let's jump to Bitcoin. Our last thing I want to take a look at. Bitcoin monthly chart looks like it is trying to stage a rally. It also came to a Fibonacci support area. The 618, again, a very well watched. The number is called Phi. In fact, your cousin Alexis was born on 618, 61891. The 618. So the number is Phi Day. They say Phi Day is something else. They do 61% of the year. They'll take 12 months of the year, take 61% of that, and they come up with a completely different date. But I say 618 is cousin's birthday. Okay, so here we go. Bounce from there. Let's drop to a weekly chart. We see prices turning. It's still a downtrend, guys. It's lower highs and lower lows, and I know we're bouncing at a magic fib number, but I would want to see a structure change where we have lower lows and lower highs and lower lows and lower highs and lower lows, and then we have a lower high. We need to see a higher high. I wouldn't touch this until we get above, almost 82,000. We need to get past the 38% retracement at 83,000 for this to be safe. Where you actually have an inverted head and shoulders, you would actually have, a break of a new high, a structure change. So I'm still bearish on Bitcoin, even though it is bouncing. You could probably take a low risk entry with a stop just below, almost like picking the bomb like I did in Euro, trying to get a dead cat bounce, so to speak. Let me go ahead and remove all drawings. If we took a Fibonacci from the high, and that is our absolute low, about 58,000, right? About 57,350. The 50% retracement is about 91.75. I'd probably say, look, let's see if we get back up to here. Probably just take a low risk dead cat bounce trade, right? But it's very anemic, not very strong. But bulls versus bears, I'm bearish. Okay. So there you go. Now, for that. Now we've had a lot of samurai sword trades that we've had that I wanted to share with you that were just phenomenal trades. Where, this was yesterday before the attack on the tanker, where we got long. This is during the London session, not London, Tokyo samurai. Yeah, Tokyo session. It says it right there. 5-minute Tokyo session, opening range breakout 7 p.m. And we see a break above the high, got long on a break, pulled back, got long again, and then went ahead and took it out for $14.30. Now, if you're trading with a $50 account, that's a pretty good, like almost a 30% move in that trade. Now we had a couple of more that were like that too. Let's see. They're all like the Australian dollar. This was monster. We had tight range consolidation between 69.89 and 69.90, and then we had news. We had the Australian news that came out better than expected. Strong employment data, and boom, we got a big move there. $14.40. Another 30% move. If you're starting with a $50 account with our $50,000 to $50,000 challenge, we're looking at taking small risk for asymmetric gain, and so that was a pretty good move there, where we know when to enter, and we usually try to get 3 or 4 times what our risk is. So if we're risking $4 or $5 or $6, we're trying to make $24 on that, right? So this was yesterday as well. And then, we have when the dollar was backed up against the mat yesterday, Tokyo sessions usually counter trend. He said, well, Greg, you were shorting all these other pairs. I was shorting during London. London usually fades Asia, right? And this is what we teach in the $50,000 to $50,000 challenge. And I'm going to if you want to join the August challenge, is getting ready. It started. So if you want to enroll in that, come over to 50 to 50K challenge, and you can watch a video on that, on how it works. We have one proven strategy, the Samurai Sword breakout, one indicator, money management system, the compounding blueprint. I'll show you the compounding blueprint. In fact, I'll show you how we can taking small gains instead of taking lots of random trades. Each trade is taking with a target, a target. Oh, yeah, there we go. Right, so we start at $50, try to get 25 pips, which we did on several of those trades, and we moved to 62.50, 62.50 to 80, 80 to 102, 102 to 130. We're trying to get 25 pips each time. We're just increasing the lot size in each trade. 165, 0.18, then 210, 267, 340. By trade 10, you're at $432, which is more than the month cost. I mean, you basically do this in 30 days. But let's say, I had a guy that only got up to the day 10. He made $340 or $350. And he goes, well, I didn't make 50,000. It's like, well, what did you pay? $147. Well, did you make your money back? Will you be back next month? Yeah. Well, guess what? You're going to start here, right? So now the next month, and he's at day 10, 432, 550. We had one guy, first time he ever did it, he was at $1,600. So he was in between step 15 and step 16. Well, you think he signed up again? Yeah, right. In fact, he's going to sign up for our Founders Annual. If you sign up for our Founders Annual, what happens, you can talk to me. I'll show you a demo of how this actually works. And they get for a full year. Now, most challenges, you don't get help from people. You don't have a system. You don't have software. We have this wonderful software, the Samurai scanner that we use for finding our dashboard. And then, we have our major currency pairs, different sessions. Right now, everything's kind of quiet. And we'll probably have to do a little refresh there and turn on the sound. There we go. So we have maybe all Forex, right? And so we have the scanner is looking for all the trades which are breaking out. So this one broke out, went down, and we click that. It shows us, whoa, look, the Samurai Sword. Oh, the break. Oh, where's my entry? Oh, where's my stop? Ah, that's pretty easy. Hey, we want 25% of the ATR. The average daily range is 100 pips, and 100, somewhat maybe in the 90 pips to get. So getting 21%, 21 pips of that, that's a pretty good deal, right? So we have our risk, our R1 risk, our 2R risk, our 4R risk. And so, because if you get on one of these trades, you're like, man, if there's another one I can get into, it'll be great. And so this actually will grade them from A through F. And sometimes, even some of the F ones perform pretty well, right? Here is pound Kiwi. And, right, was that performed pretty well. CAD yen. Oh, that kind of stayed in the channel, but dollar yen was a pretty good one, right? Okay, that's New York. But let's go back. If we go back to our London ones really showed out there. That was our gong, our Japanese gong. But there we go. Look at that. Not just the 1R, 2R, 3R, 4R, right? So got the long there. So you get access to this. You get lifetime access to it when you become actually we get year access for the year plan. So that's a pretty cool tool we have. We also have our FTK, our dashboard, which is another helpful tool for a diary for tracking our trades. Another AI-driven tool that we have that was created here, where we start with our small balance. We're trying to go from our $50 balance to 56,000, and we have where we are. We place our trade. We can connect this to our trading account, and we have a trade analysis. In fact, Kira helped me with this. Kira says, "Hey, why don't you have a daily devotional? Where we can actually have scripture, focusing your mind on what you are praying about. Then our journal where we can actually log in our trades. James AI actually looks at your trades and is your personal AI coach, going over your trades with you, keeping track of where you are, and checking on your mindset and things like that. We have the full trade analysis, total return, monthly return, a risk of ruin, worst week average loss, and your recent activity. So all this comes as part of this. So we have a holistic ecosystem where we wrap around you when you join the 50 to 50K challenge. So you want to find out more, I think you can book a call at, let me see, we have a book a call. We have a page you can go to where you can see some testimonies. You can talk to me. You can book a call with me. I have a couple of spots left on my calendar. I will go ahead and let me go to our YouTube channel and go to our live streaming. I'll put that link in there for you guys. And excuse my channel. My channel is like full of food and recipes. And then let's go ahead and so let me go ahead and give you guys. Let me go to our chat. Yeah, and then you go book a call with me. Book a demo with me. Okay, I'll put the link in there in the chat box. I'll go ahead and pin that up there as well. Spots are filling up fast. They pin message right there. Okay, and there we go. All right. And I'll just open up for questions. If you have any questions about the market or about setup or anything like that. And if not, then we'll go ahead and say adieu and au revoir. John, you good? Carrie, you good? Okay. With that, thank you so much for being aboard.